Thanks very much. Oil prices up about 1% or so this morning. Let's get right to our market roundtable at this hour. Joining us for that is Michael Tyler, Chief Investment Officer at Eastern Bank Wealth Management, Chris Bertelsen, President and Chief Investment Officer at Aviance Capital Management, and of course our guest host for the hour, Michelle Gerard, Chief US Economist at NatWest Markets. Good morning to all of you. Michelle, if I start with you in terms of the sort of state of play economically, pretty good still domestically, nothing to complain about?
No, I mean, obviously the economy is doing very well, and we saw that echoed with the earnings results from companies that have continued to, report great earnings. I'm really confident about the economy, the momentum, the second half holding up. I think we're going to see growth 3%, which is something that we haven't seen since 2006, to see the kind of growth we had in the first half of the year, more or less trends sustained into the second half of the year. I'm very encouraged by what I'm seeing domestically.
Michael, do you agree, and do you think the earnings picture has followed up the strong macroeconomic data?
Oh, sure. There's no question. You're looking at the second quarter numbers are pretty much in the books now, and we've got 24% earnings growth on almost 10% revenue growth. What's surprising is that those numbers are stronger than the first quarter, and I think that's something that caught most of us by surprise. We were expecting about the same or maybe slightly lower than the first quarter. The real challenge for us is, hey, the market still hasn't gone past its January highs despite a real pickup in earnings. What's holding it back?
What is holding it back in your eyes?
I think the key thing is that there's a fear that you can never predict peak earnings growth. You never know when it's going to start slowing down. It's not provable until it's past. And I think people are afraid of paying up for earnings right at the top of the cycle. But the fact is that, as Michelle said, the economy is looking at its first 3% year in a long time. We see all the leading indicators are still positive. Credit quality is outstanding. Earnings quality is outstanding. There's really nothing right now that's telling us a recession is imminent or even that a major slowdown is imminent. So I think we should be seeing the markets continue to power higher.
Chris, what about your view on equity markets? Is it time to start to rotate into slightly more defensive sectors?
Well, I think there's some value opportunities. I agree with the other guests that 80% of the companies reporting have beaten, more than 80, and you have the best quarter in the 16-quarter presidential election cycle up, on average. And I think with all the guidance that I've seen go up, I think the fear of an earnings peak is a little overdone. But I think it is time to rotate into some value names. To me, the internet stocks, in particular, social media, look to me like they're kind of in the rearview mirror. I think they're about done, and it's time to look at cheaper opportunities.
One of those is Verizon. Is that right, Chris?
Verizon with a 4.5% yield. And the big story about Verizon is, unlike AT&T, they didn't go out and make an acquisition, or Vodafone for that matter. They actually sticking to their knitting. They're rolling out 5G. It's our chance to catch up with China as far as 5G is concerned. It's huge. It's a big change for, we want to get streaming video and everything faster and better. 5G is the answer. Yes, I definitely look at Verizon.
Michelle, some of those dividend stocks can look attractive at the moment, but in a year's time, will yields look more attractive than some of those 4% dividends?
Well, I think we're going to see yields moving higher, but we talked about Jamie Dimon and 5% yields. It's hard for me to think we're going to go that high if we don't have an inflation problem. So I think they'll be more challenged. I do think that fixed income yields are going to move up, but I'm not sure that it's going to necessarily take away the luster. The real question is to the extent that you see any kind of weakness in equities and a shift into fixed income from a more fundamental standpoint.
Okay, I have one question for you. Did you see this Larry Summers piece today? I don't know, it was in the FT. I'm just curious what everybody thinks about this. Of course, he's knocking the administration and saying that the U.S. should not get any credit for what's going on in the markets. But this is what he says, and I'm just very curious because it also relates to where you'd put your money. Says it appears that growth has accelerated and exceeded expectations more outside the U.S. than within the country, suggesting that whatever is driving America's growth is a global factor rather than something for which the U.S. policy can take credit. He goes
That's
on
not
and
true
on.
this year.
It's soon.
Last year.
I'm biting my tongue.
It's a last year
with all of
phenomenon, right?
Right. I mean, there's no question the U.S. economy benefited last year from strong global growth. The story this year, however, has been the outperformance of the domestic economy because of the injection, I believe, of some fiscal stimulus. I was going to say, with Michael talking about where we are in the cycle, he was, making the point we had gone. I know Mike was talking about, or not here, but he's written about the fact that we had a kind of a profits recession, and we've come out. We're earlier in the equity cycle than.
Michael, weigh in on that.
Yeah, I mean, the fact is that the U.S. right now is doing better than the rest of the world. We're pulling the rest of the world along with us. And we did have a profits recession. That is to say, our earnings growth was negative from 2014 to 2016. So we are earlier in the cycle than most people think. And right now, unlike Chris, I'd say you've got growth companies that are growing really well right now. A prospect of higher interest rates, especially if inflation picks up, which to me means that there'll still be some pressure on the rust bucket defensive companies and that the growth companies can continue growing for a while.
Okay, guys, we will leave it there. Chris and Michael, thank you both very much. Michelle, of course, stays with us for the rest of the hour.
Okay, a lot more coming up on Squawk Box this morning. The DOJ explaining why it is appealing AT&T